who should subscribe to FSA? Okay, so basically what we're trying to do here is sort of give you an idea of what we think is a good fit, with us. Because we don't want people that are a bad fit. We don't want people to sign up for our service and then, be disappointed and it wasn't what they thought. Okay, so if these next few points on these in this video make sense to you, you're probably a good candidate. Okay, so first one is, well, anyone with a self-directed retirement account. So you're managing your own money and you're looking to buy stocks and invest, and that's your thing, then we're probably a good fit. Also, I should throw in there, if you're an investment advisor, I actually think this is a really good fit as well. I should probably do a whole series on just investment advisor. But anyway, it is for the self-directed investor that we really are thinking about at this moment, and how we can help them. Okay, so what else? First of all, you're an investor mindset and not a trader mindset. Okay, meaning you expect to be in the stock for a minimum, like you expect to be in a stock for a minimum of a year, and that doesn't necessarily mean, by the way, you might get out in a month if something changes. Say they come out with a press release and it's like, it happens. It's unfortunate and it does happen, and you change your mind. That's a different story. But your expectations are to hold it for at least 1 year. I mean, I've held stocks for over 10. And the longer, to be honest, the longer I hold them, the better is my mentality. I want to hold stocks for the long term. I want to make sure I get the right ones. If I've made a mistake and I see the numbers aren't coming in the way they were supposed to, and of course I'm going to change my mind. But my mentality is I'm going to own it for the long term. So if you're a trader, this service is not for you. Okay, you will not be happy, because we're just gonna, we're gonna be like, yeah, we told you to buy XYZ company last week. Why are you asking us about it again? Unless some big piece of news came out, we're not going to change our mind. Okay, it just doesn't work that way with us. Okay. Okay, so investor, not trader. Self-starter. This kind of goes along with anyone who, I guess, has a self-directed retirement account, right? If you have a self-directed retirement account, you're probably a do-it-yourselfer or a self-starter, like one of those guys. But that's the mentality we want. Is someone that's proactive, looking for stocks, wants to do this, wants to learn, wants to absorb and get ideas from other people. So that kind of leads us into the next few points. Investors who want to understand the fundamentals and valuation. Okay, we're not going to be looking at charts and graphs and like, see, this line went here and this is a double top and this is in a channel and all that stuff. We don't do any of that. I mean, we'll look at a chart. Of course, anyone who doesn't look at a chart, that's impossible. You're going to see if the price is stabilized, if you're trying to catch one on the, trying to catch the bottom or something. I doubt you're going to do it while it's going straight down, or, some pretty obvious stuff. But we're not going to be doing technical analysis, okay? So it's people who want to understand fundamentals. They want to understand the balance sheet, the income statement, the cash flow, how the return on capital is working out. Is it improving? Is it declining? Is it high? Is it low? Are there dividends? These sorts of things. That's the right mentality for us, for a good fit. Okay. Last but not least, but investors who value the opinion of others but still take responsibility for their own investments. Okay? I do not want you to sign up if all you want to do is have a self-directed retirement account and just take our recommendations and barely do anything. Okay, I want you to take responsibility for your own investments. Of course, we're accountable. Okay, we are accountable. That's why we're doing these, and we will, do everything, excuse me, in our power to give good ideas. But ultimately, if you're in a self-directed account, you're going to take in information, hopefully from other sources, not just us, and make a good decision, and one that you can live with, good, bad, or indifferent. Because I know we're going to make some good ideas for you. I know it. We've done it. I've done it for 20 years, and I make a lot of good decisions. But I also make some bad ones. And I don't want to hear from you if something goes wrong. I don't. And just like, same, if you do well in something, you don't need to thank me. And even if you got it from me and you need to do one more bit of homework, I'm just happy for you. And if you want to say thanks, great. If not, that's fine too. But on the same side, if something goes wrong, you got to take responsibility. Okay? Is that fair? If all those 5 points are fair, then you're probably a pretty good candidate. So let's just wrap that up. Anyone who has a self-directed retirement account is probably a good candidate. Investors, but not traders. Investing meaning you're holding things for a longer term. You expect to hold them for a long term, not just looking to trade for a couple of days. Self-starters. I mean, that's anyone with a self-directed retirement account. Maybe that's a redundant point, but it is what it is. Okay. Investors who want to understand fundamentals and valuation. They want to understand balance sheets, income statements, cash flow, how things work, how the company's doing, revenue growth, that stuff. And then investors who value the opinion of others but still take responsibility for their own investments. If those 5 points resonate with you, I would say you're a pretty good candidate to sign up for our videos and subscribe, and I think you'll get a ton of value. So if that fits, we'll see you in the videos.